Investing is not for me. We hear that a lot from our friends, from our family. And when I look at the world of investing, looking at YouTube channels, books, speakers, events, it also does come across as more male dominated. And I wanted to hear what stops people from investing and what shapes our own investing approach. So I have my friend Ashlyn today to talk about how her investment journey was shaped over the years. Welcome back to Investing with Daren. Click the subscribe button to stay updated to more interviews like this. Ashlyn, tell us about yourself.
Hi, so I'm Ashlyn. A little bit about myself. I guess I would start with my background. I'm Singaporean. I've lived in 3 different countries in total, including Australia and the States. And my background is, I studied accounting and now I'm actually working as a sales professional selling software. So I'm a tech salesperson.
How would you rate your financial literacy from 1 to 10?
I would say, maybe like 6. Yeah. Even though I've been investing for 5 years, there's still a lot to learn in the world of investing. But everything that I've learned, it helps me today with my approach. And I think the good thing about learning about investing is it's all crystallized knowledge, right? You can take what you've learned, in year 1 and then build that towards, as you continue this journey, which could be quite a while, I would say, many years to come.
Agree.
Yeah.
Agree. You talk about being on a journey. For many people, the hard part's getting even started on the journey. What
Yeah.
started you on that journey?
Both my siblings are actually in the world of finance, and my brother is quite good, I would say, at investing. Of course, I go to my brother initially at the start, just ask him for some advice. How do I get started? And because he works or used to work as an investment banker, he gave me a few tips. But I think with every investing journey, it really starts with one thing, right? Which is creating a brokerage account and putting money in there, and then start buying 1 stock, 2 stocks, and then you kind of build your portfolio over time.
So it sounds like your investing journey started with stocks.
Yes, and it has over time. I would say now it's still predominantly 2 asset classes, which is equity stocks and a little bit of cryptocurrency.
When you first started investing in stocks, which countries' stocks did you start buying?
Yeah, so I've actually never bought a Singapore listed company. All my holdings, actually, I would say I only have 2 types of holdings, and they're either a US listed or a Chinese company. Yep.
Talk a little bit more about what shaped that, because to make those choices about US companies, Chinese companies, there must be a thesis or
Yeah.
philosophy behind it.
So I like to invest in what a lot of people would call growth companies, right? Growth companies that have so much potential, and I know because investing is all about putting money aside today and hoping to get a lot more in the future. And only growth companies would allow me to kind of get that capital gain instead of a very stable company that just pays me dividends, but not so much about getting the principal. Or a good capital appreciation that way. Actually, the main question I get asked a lot from close friends who know that I love to invest is, what companies do I buy? And how much? How do you know that this is a good stock to buy, right? Because everybody wants to buy stocks that will go to the moon, and. So I would say three things really. So first is within my network, I meet a lot of people within the tech industry. So I always get curious about what they are working as or what their company is about, how their company makes money, how many different revenue sources do they have, the landscape that they compete in. Do they have competitors in that market who has an even better product than what they have, and if so, then I'm gonna look at their competitors and then look at the financial ratios and decide if that is a worthwhile investment. And then the second thing is I watch a lot of news, so that could be people that I follow on YouTube channels. That's one. The second one would be watching just like CNBC. I like to watch Jim Cramer on Mad Money, and those are areas where I got to know about companies that I may not have come across because I hear about them. It's always like people tell you about a company and then you start researching about what this company is about. If you feel like there's a good growth in that company, and then that's where you start thinking about or putting it into your watch list. And then when it's the right time, then you kind of buy into it. And then the third one, I would say social media, like just following people on Twitter.
Yeah.
And yeah, those are the two different channels that I use.
One that you mentioned was really understanding the company's products, which not as many people do. A lot of people will read financial reports, look at financial news, but truly understanding the products really gives you an on-the-ground sense of, is this product sticky? Is this going to have 10x growth? Because you're investing in growth companies. How do you think about looking at products? What do you look for in a product when you do research on it?
So there's two types. With every company, there's two types, right? One is a B2C company, and then the other one is a B2B. And sometimes it can be a mix of both.
Yep.
So, with B2B companies, it's really about, I think those are the ones that people find it a little bit harder to understand, because some of the products can be quite technical, and this is when you really have to look on the company website, research about what they do. There's a lot. I think the world that we live in today, there's nothing that cannot be found on the internet. So if you do a little bit of due diligence and your homework, you won't be able to understand how they make money. There's a lot of articles out there writing about companies and how they make money. And also one good source is also going on to LinkedIn and figuring out who is the leadership team of this company and what are their backgrounds, because you can almost kind of be sure that this company is in good hands of a very good team, and they will want to bring that company to the next stage of growth. So the other type is more like B2C, right? So we kind of, I think this is a little bit easier for people to understand, because think about companies like Apple. We all use their products, Samsung or like Amazon, which I think when I was living in the States, I live off Amazon. Like I just buy everything on that platform. So you can kind of see how much reach this company has, when it comes to the market. And if you think about Amazon's competitors, would you buy Amazon or would you buy their competitor because of their market share?
That's a very good point. B2B companies can be harder to understand. Among many circles of investors, Palantir is a very popular stock that they're investing in right now, and they believe in high growth prospects there. For B2C, it's so much more relatable. I have my iPhones here, my Apple Watch here, all the products that we use, ordering on Amazon or Shopee, we get it. We are users, we deeply understand their products. What was it like buying your first stock? Walk us through the process and how you felt after that.
Wow, that was at least 5 years ago, or around 5 years ago, around this time. And I remember this time frame because my brokerage account just sent me an email to congratulate me for opening an account for 5 years with them. The first stock, honestly, I don't even kind of remember the first stock that I bought, but I remember the emotion behind that first stock that I bought, which is, I'm hovering over I'm hands on my mouse, and I'm like thinking, should I click buy? Should I click buy? How much? Is this too much money? Is this too little money? What do I do? And I was just like, okay, well, this is it, right? You just got to do it. So it wasn't a lot of money at that time. So I was just like, okay, I clicked buy, and I've just, let the transaction go because I just bought it at a market.
Market order.
Market order, yeah. And then after that, I just kind of, relaxed on my chair, and it's like, oh, I'm investing now. Yeah, that was pretty much the story. But, it gets easier. Then that's when I bought my second stock, third, fourth, fifth, and, now it's like, I think in my portfolio, it's probably about 12 to 15 that I hold. Half of it is long term. I would say like 70% of it is like long term, and then the other 30% is more short to mid-term.
What's your
Yeah.
definition of long term?
Long-term is anything that's more than 5 years. Short-term to medium-term is short-term. I would say at least give it a year. Medium-term is somewhere between like 2-3 years. Yeah.
Even your short term is considered long term for some people.
Yeah, I know, because I've made the mistake of, so there are some equities that I bought, in my first year of investing, and I saw it go up. I was like, oh wow, I've made a 20-30% gain on that stock. I should sell. That's what most people would think, especially when I'm a newbie. I was like, 20% is not bad. Okay, I'm gonna take my money and take profits, right? But at that time, and because it's the first few stocks that you're investing. Of course, you would buy a very safe company, right? And 5 years later, that same or the 2 or 3 companies have given me a 2 to 3x return if I haven't sold it back then. So that's the lesson that I've learned over time as well, is don't have such a short-term view to holding stocks and with good companies that is going to be around for the next 10, 20, even 30 years. Yeah.
Agree. If you've done your due diligence, you've done your research, and you find that these companies are fundamentally strong, if you sell and take profits, where are you going to put your money next? You still come back to those companies if the thesis still remains true. Some of us do have shorter term investments. Like you mentioned, 30% of your portfolio is short term. How do you distinguish between both, and what still makes you keep shorter term investments?
I mean, with short-term investments, it's going to be short-term, right? And when you see that it's gone up a certain percentage, you would feel like, okay, I've had a good run with this stock. I now want to take it out. The thing about that is you need to be quite diligent in monitoring when, what price that stock is at. And if you want to take time, I would say, to take the guesswork out of this and, spending the time and effort to monitor it all the time, what I do is, after it gone to, let's say, a decent amount of return, right? This is when I set a stop loss. So if it's gone up, let's say this is where I bought the stock. If it's gone up here, I'll put a stop loss somewhere here, so I don't have to monitor it, because we're in a time zone where things happen while we are sleeping, right?
Can you share with the audience who are not familiar with stop loss, what is it?
So what a stop loss is you can actually put an order to sell your stock if it goes below a certain level. So let's say I bought a stock for $100, right? And if it goes below, and the maximum percentage of loss I want to take is like, say 5%. I will put a stop loss order for $95. If it hits that mark, it will let go of my holdings. So I never lose more than $5 a stock on that. But I guess with that principle, if it went up to now, say it's $110, it's a good 10% return. I would put a stop loss at 105, 107, and then I'll just let it keep going up. Every time it moves up, I will readjust that stop loss. So, I would always have more profits to take and not have to think about it as it moves up that line. But in the event that it does move downwards, then it would actually exit that trade for me.
I want to share another perspective on stop losses. So when I invest in companies I have high conviction in, like Tesla or Apple, I don't have a stop loss because some of these companies are highly shorted by short sellers who are trying to drive the price down. So they may have trading strategies that drive the price down to 80, 70, 50% of the current stock price to trigger stop losses from retail investors like this situation. So I don't have stop loss for my very high conviction investments. With that said, it is a good way to protect us and manage our risks. Ashlyn, you mentioned that you actually do monitor your trades, and one concern with many new investors is how much time should I spend looking at my brokerage ad, looking at my stocks, and how do I make sure that it doesn't consume my life?
There's different types of investors, right? And I think the first thing, if you're starting as a new investor, whichever stage of investing you're in, I think it's always good to just reevaluate yourself as what your risk profile is and how much time you actually want to spend monitoring your portfolio. Through my experience, I've learned that I am quite a risk taker. It depends on what your risk appetite is. For me, because I like the excitement, the thrill of investing, so I spend a bit more time than I would say the average person would, just because I like it, and I would actually spend my free time, my free hours, watching YouTube videos, reading up on news and things like that. But if you feel like you don't have that much time to monitor your trades or your portfolio or figure out or do all that research or reading, then I think it's better to invest in good have a very long-term strategy on your investment approach so that it doesn't consume you. Because if you're buying into like a really good company, over time, in 5 years time, this company's equity is still going to grow and grow and grow. So looking at it every other day or every other week is not going to make much of a difference to how the stock is going to perform in 5 years. Yeah.
Actually, you mentioned that you have 12 to 15 different stock holdings right now. And one thing that matters to a lot of people is peace of mind. So what's your take on investing in exchange-traded funds, ETFs, where it's a basket of stock? Because those can be growth as well. Example, like Katie Wood's ARK Invest Fund, where they've got the Genomics Fund, the Innovation Fund, the different tech funds. What would make you pick between an ETF and buying individual stocks? What's your take?
So I think Cathy Wood's ETFs has a lot of different companies in there per ETF. If I think getting into an ETF is quite a good strategy for most people, because you have someone with professional team managing that for you, and I'm sure they know what they're doing, right? For me, I personally prefer to stock pick, and all my equities are actually individual companies. I don't buy into ETFs. I used to have some ETFs, maybe like one or two, but I have since moved them into individual stocks because like I said, am more of a risk taker, so I'm looking for the higher return an individual stock can give me. Having said that, I'm also willing to bear the losses should it go the other way.
Comes to the territory. So you're more of a risk taker. You started investing in equities first in stocks. How has your investing philosophy carried over when you started investing in crypto?
With crypto, I actually invested end of 2017, and I think we all know what happened in 2018, which is it went down 90%. Thankfully I didn't invest too much, but it's also not a good feeling to know that now you're only left with 10% of what it was worth. And to me at that point in time, I was just like, well, that's not really a point selling and getting a 10% capital back, because it's not going to make or break my bank. So I just kind of left it, didn't think about it for, I would say, 2 to 3 years. And last year, and towards the end of last year, it started coming back up, and now I'm kind of glad that I held on to it. I would say the same principle would apply with crypto as well, with investing in crypto, because at the end of the day, with crypto, it's backed by projects, right? Think of projects as companies. What is it that they're trying to solve? How are they competing with other projects that has the same kind of function or utility in that same space? I think crypto is needs a little bit more attention, because this is a market that never sleeps. And if you cannot handle the swings, which obviously I've lived through that, and I want to just kind of share with you my experience. It can be quite scary. Yeah.
Ashlyn mentioned that crypto is a market that never sleeps. See, if you buy US, Singapore, China stocks, it's Monday to Fridays, trading hours. Crypto, you can be looking at your app on Saturday and Sunday and it's still moving up and down. Volatility is part of the game. High highs, super low lows.
Yes.
Investing is hard, and a lot of it is mindsets. And right now, a lot of my friends, especially those who haven't invested yet, they're not sure what's going to change for them to actually start investing. If they've heard about all these investing tips for years and nothing has changed, they just wonder, how do I actually bite the bullet, open a brokerage app like Ashlyn and actually start investing? Do you have a tip for people who are trying to get into investing but for whatever reason they just can't?
I think if you have been thinking about it but hasn't taken any action, it's always like just blocking time on your calendar. Take a Saturday afternoon and prepare all your documents. Just sign up online, put some money in. That's the very first step. If you open a brokerage account, you haven't bought any stock, right? So it's not a scary process, but the good part is you are ready when the market is when it's a good time for you to kind of step into it. And I think the one advice I would share is, if you are a little bit more cautious, then go with the safe bets, so like the FANGs of the world. And mentioned earlier, it's good to understand what your risk profile is like. A lot of brokerage accounts actually offers like a virtual trading account. It's kind of like, it's not real money that you're investing, but you can kind of invest as though you're investing for real. I think when the market moves, observe how your own emotional state is, because that's very telling in terms of how you should continue your investing journey in the future.
Agree. And nowadays, there's some brokerage account that say give you one Apple stock. You may have to fulfill some conditions like put in $2,000 in the account, but that's a way to almost get you started by default. Ashlyn talked about how we need to really be mindful about our emotions when it comes to looking at our investment performance. What is your relationship now with money?
I think that's a really good question, because if I look back 5 years ago, I was always thinking about, especially when you just stepped into the world of investing, you're like, I don't want to lose, right? Nobody likes losing money when they invest. All they want to see is like, every time I open my brokerage account, it just goes like, in the right direction. I think my relationship has changed, where I am not as attached to it. Like so during COVID, I give you an example. Last year in March, of course, everything just went crashing. I was in New York at that time, so we're in a time zone where the markets were really active. And I remember there's this 1 or 2 days. It was the start of the coronavirus really hitting the US. And I see my account lose 30 to 40% the moment it started trading. And I was just like, wow, that's okay. Well, in the past, 5 years ago, or up until let's say 2 years ago, what I would do is I would kind of panic, right? And I would be like, oh no, what's happening? Google and research about things. But at that time, last year in March, what I did was quite different. I decided to move a lot of my cash into equity, so I just keep topping up my positions, because I know that I'm getting it for a cheap price. If the situation that we're now in, or if the stock is actually bettered because of a situation that doesn't concern the company, if you get what I mean. There's nothing fundamentally wrong with the company. The company is still going to grow. It's just that period that is so unique. It's like a black swan event, right? It's so unique that it impacts all companies at that point in time, and you're getting a deal. So that's where I started putting money in. And it's worked out well for the last 18 months. Yeah.
Happy to hear that. Something like COVID is a once-in-a-century pandemic, a black swan, as Ashlyn mentioned. Okay, big question. Tesla stock. Buy, hold, or sell? Your personal opinion. This is not investing advice.
Oh, okay.
Individual opinions here.
For me, I will hold. I do own Tesla stock and I'm gonna hold them for a really long time. If I have more cash, I will be looking to top up when it's a good time for me to buy it.
I'm buying Tesla. I'm dollar cost averaging, as you call it. So I buy once every 2 to 3 months once I accumulate sufficient cash to buy. I usually buy about 10 to 15 stocks.
Cool. How much is 10 to 15 stocks? 7 to 10?
10 to 15 stocks would be
7.
about 10K USD.
Yeah.
Thank you for sharing your perspectives, your journey into investing, your mindsets, and how it's changed. Thank you for letting us learn from your stories and your experiences.
No problem. Thanks for having me.
So if you like this interview, click the like button. If you want to see more interviews, hit subscribe. Thank you for watching, and we'll see you in the next one. Bye-bye.
Okay. Good job.